R. Balakrishnan, investment analyst, joins us from our Chennai studio as well. Before we get in chart check going, Mr. Balakrishnan, good having you. Thanks so much for joining in. Our analyst just outlined that getting fresh environment clearances, which means the process gets delayed by close to 6 months, obviously is a negative for these companies. Just the category A mines. We are not even clear what happens to the B and the C mines. But broadly, you in consensus, and how big a negative it is for companies like JSW, which desperately need the iron ore to reduce the cost of production?
Well, I think I look at it that there is a whole kind of negativism which has kind of crept in, which has perhaps changed the way companies do business in India, where it was all a kind of a very user-friendly approach which used to be there for so long. I think when that whole foundation and the basis for setting up and running businesses change, I think we have to sit down and reassess what is happening on the ground. Yes, these are companies with good potential, good expertise and everything, but if there is this kind of regulatory approach or regulatory impact which slows down their operations or slows down their expansion, obviously I think the values in them start to shrink momentarily. And I think the outcome of that, I think it is beyond us to put a call on that, because I think the way the whole regulations are being approached and the activism is going around, I think it goes beyond the realm of economics and moves into a different plane where I think us mere mortal analysts don't have a way to really analyze them and take a call. At best I can say that yes, at this price probably these are great companies because they have delivered far beyond this in terms of their past. Now if they were to start operations and do the same things all over again, I think these companies become bargains. So it's a call one has to take, whether these regulatory slowdown on their operations, is it a temporary phase that it will come over in 3 months, 6 months? I think it will, logically it should, because one is we need the resources, two, if there is a price to pay for it, I think let's do that and go ahead with it. If there are environmental safeguards to be built around it, yes, probably some kind of margins might be impacted. But I think nothing takes away the value from these companies, but I think these are uncertain times for these sectors and these companies. So I think you have to take a very long call on these kind of counters and only hope that there is no more bad news which will probably make them better bargains. I think that is the call one has to take. I think these are good companies in businesses which are important, and these are globally linked commodities where the prices are transparent. So it's again, I think, as I say, it's beyond economic analysis.
You're saying that you're a buyer in these companies at these levels?
Well, I think the markets itself, if you look at them, I would rather wait. I like these companies at these prices, but it doesn't mean that I have to go and buy it today. I would rather buy it when I can sleep peacefully once my investment is placed. I don't mind paying a higher price. I think unless you have so much deep pockets that you can afford to place some of your chips on these counters.
Sure.
If you have that kind of resources, by all means do so.
Mr. Balakrishnan, come to you on some of the topics that we discussed. One, what do you do with the Reliance Industries ahead of the numbers? Stock is in a bit of a, in a very tight range, not really budging too much, at least not on the upside. Are you convinced to probably initiate a long-term buy, or you think this one could see lower levels and there will always be a better time over the next 6 months to get into it?
No, I think Reliance at these levels look very interesting to me, because I think even if it drops, let's say, as the technical analyst was saying, that it could touch 710 or 700. I think if I'm buying for the long term, 710, 700, 730, it's a difference of 4 or 5%, which should not make so much of a difference to the returns I am looking at. And I think given the kind of businesses they are in, I think this is time to add to Reliance to your core portfolio, because I believe that as one of the largest companies in probably the sector which is an interesting and exciting sector, I think this is a good time to add a bit of Reliance to your portfolio if you don't have it, or if you have it, I think it's time to go a little bit overweight on that. Maybe you have to wait 6 months or 8 months, but when the market starts to outperform, you will probably not want to get into that. So this is a good time to By Reliance, I would say.
Anything fundamentally from the sugar pack that looks attractive, forming a bit of a base, looking at the business operations and the cycles thereof, not that they are turning too quickly, but fundamentally, do you like any of the sugar names?
Well, I love things with sugar in them, but I think I generally don't like to trade in those stocks or invest in those stocks because there's too much of governmental action which takes you off guard. You don't sleep peacefully with those investments. So if you're a trader, probably I think that it's not a bad medium-term buy, but generally in my portfolio, I don't like to add too much sweetness, as you would say.
Just get a perspective on infrastructure companies. Do you think after the rate cuts, given that some of these companies would have funding on floating rates and the cost of funding would come down for them, that they would be attractive at these levels?
Well, I think the rate cut is not sharp enough for them, I think, because I think the banks might at best pass them a 25 basis points cut to them, which is not enough. And I think the other issue is most of these companies, the mid-sized companies, also need to raise a bit of equity for which the markets are not right. So I think I will give a pass to infrastructure at this time. I think between in the last 1 month, some of them have seen a small uptick in valuation. So I would not put money into infrastructure at this time, given the kind of noises which are being made, and also the interest rate cuts I think need to be far more deeper for them to for it to make a serious dent on the bottom line. So I would not play the interest rate of the 50 bips cut in the repo rate and the 25 basis points which the banks are passing. I would wait for the secondary markets to provide a better opportunity for the rates to come down to single digits, so that it can be a meaningful funding for them. At 10 and 11% if they raise funds, it's not at all a great sign for the infra companies. So I would not use this as a pitch to buy.
Okay, the one sector post rate cuts that we're not talking as much about is real estate. Do you think with these rate cuts, some of the real estate companies become contrarian buys, or would you want to initiate any contrarian trades on any of the real estate majors? Soba Developers, of course, as the stock has done well. What would be your call there, Mr. Balakrishnan?
Well, I wouldn't be touching those two, Soba or anyone at this stage, because I think the demand is still not yet picked up at the prices which were on the table. I think the kind of developments which they are having, while they have a deep long-term value, I think I don't see the sales momentum happening for them to really go in. And the housing loan rates, the teasers, what I have seen, I mean, the first indications are that it's not going to be a severe dent in the EMI, because it's going to be a mere 0.25% fall. So that's just not going to boost demand by itself. I think the housing rates in the second tier and the other cities have to really come off. I think they are sitting with too much inventory. I think their balance sheets are still not looking good. So I wouldn't initiate a trade on any of these real estate counters at the moment.